All right, everyone, here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative. And to all my subscribers, welcome back, and let's jump into this chart. So Apple has had a recovery after hitting these lows in the recent days of 112 after this bullish run. And from that point forward, rising up, breaking through the 50-day moving average, and hitting these highs up here of 116 and quickly dipping. And right now it's very close to the 50-day moving average, slightly above it in bullish territory. And the question is, could this start to see newer lows, or will the bulls maintain themselves above the 50-day moving average? So let's move this to its new locations. A lot of volatility there, breaking through resistance, quickly falling, and falling in between resistance and support. But let's move this to its new locations, and we're going to see what's important. So this is actually a very narrow stretch here, and I'm going to talk about this a little bit broader than what is shown right now on the screen and these resistance levels. So we're going to look at it very closely, and then we're going to talk about it a little bit broader. So up here is our resistance level that the bulls want to break through. It's the highest point before falling, and that's 116.30. If that does get accomplished, this could start to see newer highs and newer resistance levels. So I'd write that number down to keep in mind for the rest of the week and also for the coming days. And the lowest point here in this up and down before it crossed the 50-day moving average is down here at 114.15. I'd write that down as well. It's a good point of reference to know how much further down this is going and how much deeper it's going into bearish territory. Now we're going to zoom in and see what's important for tomorrow. Now, we are slightly in bullish territory, and the 50-day moving average is 114.90. 114.90 is super important because that's the 50-day moving average. Lets us know on what side of the chart we're in. Are we in bullish territory or are we in bearish territory? Right now, like I've stated, we are exactly on the verge of staying above bullish territory, and the bulls need to maintain themselves there by breaking through resistance and continue to hit newer highs. If they don't do that, the bears can quickly tear through it and actually fall into bearish territory and try their best to hit support levels, especially the lowest point reached in the day here. So let's go ahead and see what our resistance level is. Our resistance level is 115.15. The bulls want to break through that, turn that into a support, and start to work their way up to newer highs and newer resistance levels. So that's super important for the bulls. They need to break through this so that the momentum can continue and they can move further away from the 50-day moving average in an upward direction. On the other spectrum, we have our support, and this support level here is 114.60. If that gets crossed, that means that two things have been accomplished. The 50-day moving average was crossed, and support has been broken into bearish territory and falling deeper and further away from the 50-day moving average in a downward direction. So this is what the bears are going to want to do, and if this is accomplished, I'd pay very close attention to how quickly this is moving from the 50-day moving average of 114.90 in a downward direction. I'd pay close attention to that first, and then if support gets broken through, I want to emphasize how important it is to watch the behavior and how quickly this is actually getting deeper into bearish territory, and are the bulls even trying to reappear to bring this one back up. That's super important to keep in mind. And again, I want to emphasize that the bulls need to break through 115.15 to turn that into a support and start to work their way up further away from the 50-day moving average in an upward direction. That is super important as well. The bulls want to do that so they can continue the momentum to work their way up in this direction and hit newer highs and newer resistance levels. If then this does get crossed and it falls below the 50-day moving average, we are now in bearish territory. And again, I would emphasize, pay very close attention to these support levels and what is going on. As always, I hope that with these cues, every single investor is well equipped and prepared for tomorrow's trading day to make their own rational decisions. And if you learn something new and you feel inclined or encouraged to subscribe, please do so. Click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise It leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.